Okay, good morning, students. How are you all? Fine. So, shall we continue with PGBP? Okay. Now, pay attention. In the last lecture, when we started with PGBP, I told you that charging section has two parts: general charge and specific charge. General charge and specific charge. This is not okay. Why every day this changes? This way, right? You have to change it. Right also. No. Press Alt. Alt. Hmm. 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 Little more. Okay. Perfect. Okay. But I'm not appearing. It is okay now. So, as per specific charge, there are certain incomes which will be taxable only under the head PGBP. Then, as per the general charge, profits and gains arising from any business or profession which is carried on by the assessee at any time during the. So, this profit and gain will also be taxable. Okay. Now, what is the meaning of business? I told you yesterday. What is the meaning of profession? That also we have done. See, difference between business, profession and vocation, I have already told you, but even if you don't remember that difference, there is no problem. Why? Because at the end of the day, income of any business or income of any profession or income of any vocation is going to be taxed under this head only. Yes or no? Next one. What is the meaning of carried on by the assessee? Then at any time during the previous year, what is the meaning of this? You don't have to be very, interested about all these things. This is okay. Now see, if assessee is any person and assessee is doing any, and that activity happens to be a business, or can I say that this business or profession is a source of income? Yes or no? This business or profession has to be carried on at any time during the previous year. So from this activity, whatever profit and gain arises, that profit or gain will be taxable. Yes or no? Now this profit or gain can be earned from one business or multiple businesses, one profession or multiple professions. See, from each of the profession, what did I say? For each of the business or profession, the profit and gain shall be calculated separately. Just like we did in house property chapter. For each house property, the income was calculated separately, and then income of all the properties was clubbed. It was added, it was aggregated, and then we had the income from house property head. So to calculate the income of house property head, first of all we calculated the income of each property separately under that head. Just like that same way, we are supposed to calculate the profit or gain of each business separately under this head. So business 1, profit will be calculated separately. Business 2, profit will be calculated separately. Business 3, profit will be calculated separately. And then profit of all the businesses will be clubbed. It will be aggregated and the income of this head will be calculated. Yes or no? Now, why do we calculate the income of each business or profession separately? We can calculate the profit and gain for all the businesses together also. No, take the income of all the businesses minus the expenses of all the businesses. We are going to get the profit. So what is the need? The need is very simple. Let's see, there are 3 types of business which can be there under this head. One is speculation business, one is specified business, and third one is the business which is not a speculation business, not a specified business, is also known as normal business. So we will have to classify our business into these 3 categories. Okay, if any business is a speculation business, it can have a profit also, it can have a loss also. If any business is a specified business, it can have a profit also, it can have a loss also. Likewise, if there is a normal business can also have profit and it can also have loss. Now see, if all the businesses are having profits, then there is no problem. All the profits will be added and there will be one income. And on that entire income, the same rate of tax is payable. Yes or no? So, tax rate is not different. Tax rate is same for the profits of all the business. All the profits of all the business taxable at what rate? Normal rates. Just like your salary income. Salary income is taxable at what rates? Normal rates. House property income is taxable at what rates? Normal rates. So the PGBP income is also taxable at normal rates. All the profits are also taxable at normal rates. These are not special incomes, no. Special incomes are winnings, long-term capital gain, short-term capital gain. On those incomes you are supposed to pay tax. At what rates? Special rates. But other than special incomes, all the incomes are normal. So on those incomes you are supposed to pay tax at normal rates. So on profits also you are supposed to pay at normal rate. But it is not necessary that the business will always give you a profit. Loss can also arise. See, if there is a loss of speculation business, if there is a as per set off and carry forward provision, it can be set off only against the profit of any other speculation business. Yes or no? If there is a loss of specified business, then the loss of any specified business can be set off only against the profit of any other specified business. However, the loss of any normal business can be set off against profits of any business. Whether the business is normal business, whether the business is speculation business, whether the business is specified business, against the profit of any business, the loss of normal business can be set off. Now, if the loss of speculation business cannot be set off, then the carry forward is available only for 4 years. If the loss of specified business cannot be set off, then the carry forward is possible only for, no, carry forward is available for indefinite year. Indefinite period, specified business. And if the loss of normal business is there, it can be carried forward only for 8 years. Now see, if you will calculate the profit of all the businesses together, what will happen? Your speculation business might be having a loss. And unknowingly, you will set off that loss against profits of other business, which is not possible, which is not allowed. Getting my point? So that should not happen. Loss of any specified business will come. That loss of specified business, unknowingly, you will satisfy that, you will set off that loss against profit of any other business, which is not allowed. So if you will calculate all the profits together, it might happen that some business is having a loss, and loss of that business will get set off against profit of any business against which it was not allowed to set off. Hence, calculate the losses and calculate the profits of each business or profession separately, so that you identify that which type of loss it is, how it will be set off, and for how many years it can be carried forward. Identification becomes easy in that case. Yes or no? So, did you understand the point? Everyone, now tell me, what is a speculation business? Speculation business is a business where no actual delivery of goods or commodities. are done whenever they are bought and sold. So whenever you are buying and selling some goods or commodities without their actual delivery, at the time of buying, you are not taking the delivery and not creating any stock. Yes or no? And at the time of selling also, actual delivery is not taking place. That is known as speculation. You just play with the price fluctuation. It happens in the case of shares. It happens in the case of commodities. It happens in the case of gold, bullion, etc., where the price movement is very frequent. The prices moves very quickly. It goes up and it comes down. It goes up and it comes down. So you are interested in earning the profit which is hidden in that price movement. You are not interested in having the stock of that commodity, stock of that good. You don't want to create a stock in trade. Yes or no? Just like a normal businessman does. For example, I am buying and selling these remote controls. So whenever I'll buy, I will have the stock. I will get the actual delivery. I will create stock in trade. Yes or no? And whenever I'll sell, I will take a product out of my stock and I will sell. I will have to give the delivery. That business is a normal business. That business is a... But what if I'm buying and selling gold? Buying and selling. In the morning time, the value of the gold was, example, 1 lakh rupees per 10 gram. Now the rates have gone so much high, no? 1 lakh rupees per 10 gram. But I am not interested in having 10 grams of gold. I know that by the evening, I feel that by the evening the prices of gold will go up. So I'll buy in the morning, and before the market closes, in the evening, before that I will sell, so that my buying transaction gets squared off and I don't get the delivery. What I'm doing? Speculation. Shares. In the morning when the market opens, I am buying the shares of Reliance. 2,500 rupees the share is, quoted at the market. I feel that by the evening the market will grow and the shares will also grow. The price will also go up. So what I am doing? I am buying in the morning at 2,500, thinking that by evening the price will go up. See, price can go up, price can come down also. But whatever happens, I will sell before the market closes. It might result into gain or it might result into loss also. But I am not worried about that. I am worried about the fact that if I will not sell, the buying transaction will not be squared off. What will happen? I will have to take the delivery of those shares in my demat account. Getting my point? And I am not interested in taking the delivery. What am I doing? Intraday transaction. That is known as speculation. Getting my point? What if I am a jeweler? Will I speculate or I'll take the delivery of goods? Delivery of the gold, yes or no? In that case, for a jeweler, buying and selling of gold is not speculation. It is normal business. For a share trader, he will take the delivery of the shares, keep the shares in his demat account as is stock in trade, and then he will sell. After some time, after a month or 2 months or 3 months or 15 days, whenever the prices are good. So for a share trader trading in shares like this, the shares are his stock in trade. It is not speculation. Getting my point? Speculation happens when actual delivery of goods or commodities, whenever they are bought and sold, is not taken. That is known as speculation. Will you remember this? Now, what is a specified business? There is one section, 35 AD. In that section, some benefit is given. We are going to learn that. Okay. So, under section 35 AD, to take that benefit, there are some businesses which are specified in section 35 AD. Like, hospital is there, having 100 bed capacity, 100 bed or more capacity. Hotel is there, having 2-star or above category. Yes or no? Cross country natural gas pipeline is there. Cross country crude oil pipeline is there. Pipeline for transportation of slurry is there. then fertilizer factory is there, manufacturing of fertilizer, then cold storage is there, warehousing is there, warehousing of agricultural produce, warehousing of sugar. Few businesses are specified under section 35 AD. So if you are doing any of those business, if you are doing and you start that business on or after specified dates, then you get what? The benefit given under section 35 AD. So those businesses are specified business. Any business which is not a specified business and not a speculation business is a normal business. So first you will have to identify that how many businesses you are having, how many professions you are having during the previous year. First identify, classify all those businesses, all those professions under the head PGBP. Now you will have to categorize also that out of these businesses, how many businesses are speculation, how many businesses are specified business, how many businesses are normal business. After you have done that, calculate the profit and gain for each business or profession separately. And why you will calculate separately? The reason I have already told. What? Losses set off and carry forward for each type of business is done differently. Yes or no? Now how will you compute the profits and gains? Section 28 is over. Now in section 28 there is a list of incomes. List of which is taxable only under the head PGBP. That list I am going to show you. Okay, no? That list I am going to show you. Don't worry. But those incomes which are specifically taxable under the head PGBP and the profits and gains of any of your business or profession, these are taxable under the head. So how will you calculate the profits and how will you calculate? Come on, tell me. Method of calculating the profit and gain is given in section number. Read this line. Read this line. Profits and gains shall be in accordance with the provisions of. That's it. Section 29 over. Only 2 lines are there in section 29. Now understand whatever you want to understand with this. Come on, tell me. What do you understand? How to calculate profit and gain? They are saying that profit and gain, which will be chargeable under the head PGBP, will be computed in accordance with the provisions of. In accordance with the provisions of section. So what is the meaning of this? Come on, tell me fast. Yesterday we did direct method, no? Was this only? Profits and gains will be computed in accordance with section 30 to 43D. Meaning that keeping in mind all the deductions which are available under the head PGBP and disallowances. Keeping in mind those deductions and disallowances, you are going to calculate the profits. Meaning that you know that which incomes are taxable here? Which incomes are taxable? Main income will be taxable. Main income from your business. Then incidental income of the business will be taxable. Then there are incomes covered under. Then deemed PGBP income. Yes or no? These incomes will be taxable. These incomes will be. But from this incomes only you are supposed to calculate the profit. From this income you are supposed to calculate the profit. How will you calculate the profit? How will you determine the profit? Simple. From this you are supposed to take the deductions which are available from section. Only those deductions which are available from section 30 to 37(1) will be taken as a deduction. You will try to take the deduction for those items also which are disallowed under section 37 2B, 38, 40 clause A, 40 clause B, 40A and 43B. Don't take these deductions because these items are disallowed. You have kept in mind the provisions of section 30 to 43D. Yes or no? You have kept in mind the provisions of section 30 to 43D. And in accordance with the provisions of 30 to 43D, you are calculating what? Profit and gain. And this profit and gain will be chargeable under the head PGBP. One more thing we are forgetting here. What? Less losses incurred in the course of business, or that also will be allowed as a deduction. But for that separately there is no section, no provision providing for this deduction. So what are you going to do? What are you going to do? Simple. Take the deduction of these losses without even having any specific provision. Why? Because without adjusting these losses, you cannot arrive at a correct figure of profit and gain. So you have to adjust those losses also. So this is the direct method in which your profits and gains will be computed as per section 29. Now see, if you are a businessman or you are a professional, will you prepare your P&L account, income and expenditure account and all? Yes or no? So will you have a profit in that P&L account? Can you directly treat that profit as your business profit? Ultimately, what is taxable under this head? Profit and gain. Ultimately, what is taxable? Profit and gain. And profit and gain you have already calculated in your books of accounts, no? In your P&L. So bring that profit and profit amount and directly charge that amount under the head PGBP. Can you do that? Why? Financial accounting depends on and here the profit which is going to be taxable, it is going to be taxable on the basis of provisions of Income Tax Act, which are usually not followed while preparing your books of accounts. While preparing your P&L, will you follow Income Tax Act or you will follow accounting principles? Accounting principles will be followed to prepare your books of accounts. And by following the accounting principles, you might have calculated your net profit in the books of accounts. Now, don't you think financial sets are different? Financial books are different. You follow all the accounting principles while calculating the profit, net profit in the P&L account. All the incomes of the financial period will be considered. All the expenses, provisions, reserves, etc. of financial period will be considered to calculate this profit. Now, if you will take the same profit and charge this profit under the head PGBP, yes or no, what will happen? Your profit will be wrong. This is not the profit calculated as per Income Tax Act provisions. Because don't you think that whenever you will prepare, if you remember, if you will prepare your P&L account, in your P&L account, if there is a net profit over here, okay, no? This net profit will be after debiting many expenses and crediting many incomes. Now, don't you think that in your books of accounts, in your financial books, these incomes which you have taken, these incomes which you have taken and the expenses which you have debited, income minus expense is nothing but profit. But don't you think all the incomes which you have credited in P&L are not related to your business or profession? You must have taken all the other incomes also. Yes or no? Those incomes under the Income Tax Act might be taxable under different heads or might be exempt also. You might have taken all the expenses. Maybe some expenses out of that are not allowed under PGBP head, allowed under some different head. Yes or no? Maybe some things which you are considering as expense here under the Income Tax Act, those things are not considered as expense only, should not be allowed as a deduction, disallowed items. Getting my point? So you have debited all the expenses and losses, you have credited all the incomes, and only then this net profit has arrived. You cannot take this net profit as profit and gain under the head PGBP in the Income Tax Act. So what you can do? We know that whatever is my business profit is hidden in this net profit only. Out of this net profit, I can derive that profit, but I cannot take this profit as my PGBP income. Getting my point? But we know that in this profit only, in this net profit only, the profit of my business is hidden. So what we will do, indirectly, instead of calculating the profits directly, indirectly also from this net profit we can derive the profit of our business. How will you do that? Come on, tell me. Definitely you will add something, you will less something, again you will less something, and again you will add something. Net profit, add, less, add. What will you do? Add, less, add, and final amount will be your profits and gains from business or profession. Now see, what will you take? The first item, net profit. This will be your starting point. Now this net profit as per P&L account, as per books of accounts, yes or no? Now don't you think this net profit is arrived at after debiting all the expenses? Meaning all the expenses are reduced to calculate this net profit. Those expenses are also reduced which are not allowed in the Income Tax Act. Yes or no? What they should be deducted to calculate PGBP income, or they should not be deducted? But you have deducted. So now you'll have to rectify. How will you do it? The expenses which are debited, meaning reduced, while calculating this profit, but they are not allowed as deduction under PGBP head, what are you going to do? Add. Add what? Expenses. Add which are debited to P&L account, but not allowed, not allowable under the head PGBP. They might be allowable under different heads, or they might not be allowable only. Yes or no? Then those expenses will be added. Now tell me, in the credit side, all the incomes you have taken, you have added all the incomes to calculate the net profit. Yes or no? So all the incomes are added, and only then this net profit is derived. You might have taken those incomes also which are taxable under different heads, or which are exempt under the Income Tax Act. Yes or no? Should those incomes be added, or they should not be added? But you have added them to calculate the profit. So now you will have to rectify. What you will do? Reverse effect. If you have added those incomes, now you are supposed to reduce them. So less what? Less incomes, less credited to P&L account, but not taxable, not under the head PGBP. Those incomes might be taxable under different heads, or those incomes might be exempt only under the Income Tax Act. Yes or no? So those incomes you are going to reduce. Now see, it is not necessary that your P&L account, whatever expense and incomes are shown in the P&L account, under the Income Tax Act also, you will have those incomes and those expenses only. There is a chance that there are some expenses, incurred during the previous year, but which are not debited to P&L. But those expenses are allowable as a deduction under PGBP. Yes or no? So the expenses which are allowable as a deduction under PGBP. Have you debited or you have not debited? Those expenses are supposed to be reduced while calculating your profit. Have you reduced them or you have not reduced them? Why? Because those expenses are not debited only. So to calculate the correct profits, what you will have to do now? You will have to less all those expenses which are not debited in P&L, yes or no? But they are allowable as a deduction under PGBP head. Getting my point? So what will you do next? Less expenses not debited to P&L but allowable under the head. So reduce all those expenses. We will call this UBE, unrecorded business expenses. So in short we will call it UBE. Full form again, unrecorded business expense. The same thing can be done for incomes also. There are certain incomes which are not credited to your P&L account, meaning not added in this profit. Those incomes are given separately, separate adjustments are given. And in that adjustment, they are saying that there are certain incomes which are taxable under the PGBP head, but they are not credited in P&L. Yes or no? Maybe your financial accounting principles are saying that this is not your income. So definitely you have not recorded those things in financial accounting. Best example if I'll give you, your in the course of your business or profession, your customers, your clients are giving you some personal benefits. That is your PGBP income. In the course of your business or profession, you are getting some personal benefit, you are getting some perquisites. They are taxable as your income under the head. But in the financial accounting, you might not have recorded them because accounting principles does not consider this item as your income. So definitely that income is not credited. Getting my point? But don't you think we are calculating profits and gain for income tax? For income tax purpose, that has to be added. That has to be added. Getting my point? But it is not credited. So not added in the profit. So what effect we are supposed to give? We are supposed to add. Add what? Add incomes not credited to P&L but taxable under the head. Under the head, we'll call it unrecorded business incomes. Yes or no? Now the final amount you will get now. This is your clean profit. You have cleaned the net profit of P&L to arrive at a profit which will now be treated as your profits and gains from business or profession. This is your PGBP. Understood? Understood? Now, see, sir, if you are feeling sleepy, try to write. Try to write. Don't sit like this. Write. Whatever you want, you can write. If you want to write whatever I am speaking, then also write. But don't stop. You will not sit idle now. Okay, did you understand? Hello, sir. What is this? Indirect method. Indirect. Majority of the times in the exams, this method is asked. Majority of the time. Now, see, to calculate your profit and gain, there are two methods, direct method and indirect method. Majority of the times, which method is asked? Now, to follow direct method and to follow indirect method, how will you identify that in the question which they have given, they are telling you to calculate the PGBP income. Now there are two methods to calculate PGBP income. Which method to follow? So the method which we like the most. No. The method which you like the most cannot be followed. You have to follow that method which will be applicable in that question. Now, how will you find out that direct method is getting applicable or indirect method? Come on, tell me. If the question gives you P&L account, if the question has given you or income and expenditure account, definitely you are going to see profit in that. Yes or no? So the examiner wants you to calculate your profit and gain as per the indirect method. Add, less, add. Or if P&L account will not be given, income and expenditure account will not be given, they will give you the details in writing about the P&L account, including the net profit of the assessee. Yes or no? In that case also, we are going to follow indirect method. Yes or no? Details of net profit, details of income and expenditure. Yes or no? Details of P&L, details of income and expenditure. If these items are given in the question, be careful, you are supposed to follow indirect method. Which method? Net profit. Add, less, add. Pay attention. Net profit. Add, less, add. Expense, income, expense, income. Expense, income, expense, debited, but not allowed. Incomes, credited, but not taxable. Expense, not debited, but allowed. Incomes, not credited, but taxable. Repeat with me, this format, if you will remember, no, everything will become easy for you. You have to remember this format. Net profit, add, less, add. First of all, go in the exam, make a format, net profit, add, less, add. Add what? Expense, income, income. Expenses debited, not allowable under PGBP head. Incomes credited, but not taxable under PGBP head. Less. Expenses not debited in P&L, but taxable under, but allowable under the PGBP head. Then incomes not credited under, not credited in P&L, but taxable under the head PGBP. That's it. Now you'll have to identify these items in the question. Once you identify, then put these items in the format, your answer is done. It is as easy. But for doing this, you should learn all the provisions of PGBP. Then only you will come to know that which item will come in add, less, add. Getting my point? So the provisions of this entire chapter you are learning. Why you are learning? That you will come to know that which items will come as expense debited but not allowed. Which items will come under which category. Getting my point? So understand the provisions properly. Okay, whatever provisions are required to be understood in depth, I am going to discuss all those provisions in detail. Trust me on this, I will solve 1 to 2 questions for PGBP with you. The manner in which I will be solving the questions, by heart. What I am telling you? By heart. Will take enough time to solve that question. I will be solving those questions as if you are doing the PGBP for the first time. And try to copy myself, copy Umang sir, that how he was reading the question, how he was marking, and how he was solving the question. 100% I am telling you, you will not read the question again and again. You will not read the question again and again. And your answer will definitely come on your calculator only within 1 minute. That is my guarantee. But for that you will have to be attentive. You will have to exactly copy what I am doing. Getting my point? And try solving few questions on your own, following the same process. See the confidence, how the confidence will develop then. Getting my point? Now, one simple question I'm asking you. I want to see how much mind you can apply. Is it always necessary that you'll have net profit? P&L is given. P&L is, now instead of net profit, net loss is given. Yes or no? Now instead of starting from net profit, you will start from net loss. Yes or no? Net profit has become net loss. Same or reverse? Same or reverse? So now the effects will also be, I will give you a tight slap if you will do that. This has to remain same. Don't change these effects. Add will remain add. Less will remain less. Only difference is, instead of net profit, it is this amount you will put in brackets. That's it. Don't reverse the effects. The things which are disallowed, expenses which are disallowed, are to be added back only. Incomes which are not taxable under PGBP head are to be reduced only. Getting my point? UBE, unrecorded business expense, are to be reduced only. Unrecorded business incomes are to be added only. These effects are not going to change. The only change will be, instead of net profit, which you have written positive here, net loss you are going to write negative in bracket. Getting my point? Understood? So this was one thing. Now tell me, when will you follow direct method? When will you follow direct method? No P&L account, no income and expenditure account, no details for that, no net profit, no profits, no surplus, nothing is given in the question. Question talks about cash book, details of cash book given. Question talks about income and expenditure account, receipt and payment account. The question talks about details of bank passbook. Then even if you want, you cannot follow indirect method. Now you will have to follow which method? Direct method. This one. And direct method is comparatively easy. What are you going to identify? Identify the business incomes. Business incomes can be this and this. Identify the expenses which are allowable under the head PGBP. Identify those expenses which are disallowed, but don't take the deduction. Identify the losses which are happening in the business. Identify these items from the question, do the plus minus, directly you will get the PGBP income. This is comparatively more easy. Yes or no? When we will be doing the computation of total income, that time there is one question on direct method. That time we are going to do. Yes or no? So right now, did you understand this entire part? Yes or no? Now this part I have given as what? A summary. Summary of incomes and summary of expenses. When are you going to add? When are you going to reduce? And when are you going to do nothing? No effect has to be given. Yes or no? Now pay attention. There is one section, 145(1). Now section 145(1) talks about simple method of accounting. See, there are three heads of income: salary, house property and capital gain. Salary, house property, and whenever you will calculate income under these heads, whenever you are going to calculate income under these, method of accounting becomes irrelevant. Salary will be taxable on due or receipt, whichever is earlier basis. House property income will be taxable only on due basis. Whatever actual rent for the let out period, whether you have received or it is receivable, will only be considered to calculate your annual value. Yes or no? Under the head house property. Capital gain income will be calculated and will be taxable if the capital asset is transferred in this previous year. So transfer is taking place in this previous year, then the capital gain will be taxable in this previous year. That's it. Now, how you are recording these incomes in your books of accounts, Income Tax Act does not bother about. How you are recording these incomes in your books of accounts, yes or no? Whether you are recording or not recording, Income Tax Act does not care only. These three heads will be calculated in the manner in which it is prescribed. Salary, on what basis? Due or receipt, whichever is earlier basis. Capital gain, taxable in the year in which the capital asset is transferred, yes or no? And for that transfer, whether the consideration is received or it is still receivable, will be taxable in the year of transfer itself, yes or no? House property income, actual rent for the let out period, whether you have received or receivable, whether you have shown it in your books of accounts or not, will not make any difference, will be considered to calculate your house property income. But two heads, PGBP and net income is taxable here. How much is taxable? Net income means profit. Profit of any activity, which is business or profession. Profit of any activity which is covered under IFOS. So whenever you are going to calculate PGBP head as well as IFOS head, you are going to take the incomes minus you are going to take the deduction for expenses. Now from where you will bring your incomes? From your books of accounts. From where you are going to bring your expenses? From your books of accounts. Bring those incomes from your books of accounts which are taxable under the head PGBP. Bring those incomes from your books of accounts which are taxable under the head IFOS. Bring those expenses from your books of accounts, take the deduction which are available under the head PGBP or IFOS. These incomes and expenses have to be brought from your books of accounts. Now, regularly you are maintaining your books on what basis? Mercantile basis. You know now mercantile basis? Yes or no? Or regularly the books are maintained on what basis? Cash basis. So there are two ways in which the books of accounts can be maintained. Number one. And number two. What is mercantile basis? Simple. Whatever income for this year, whether received or receivable, will be shown as my income for this year only. Whatever expense for this year, whether I have actually paid or it is still payable, will be shown as my expense for this year only. Yes or no? That is what? Mercantile system of accounting. In mercantile system of accounting, period is important. What is important? For this accounting period, for this entire year, whatever income is there, I take that income. Whatever expense is there, I take those expenses. Whether those incomes are received or receivable. Whether those expenses are paid or payable. Yes or no? So the books of accounts can be maintained on mercantile basis. Can the books of accounts be maintained on cash basis also? Yes or no? What is the meaning of cash basis? Simple. Whatever income received in this financial year will be recorded. Whatever expenses actually paid in the financial year will be recorded. Yes, sir. Now the incomes may or may not be related to this year. Expenses which are being recorded may or may not be related to this year. Then why I am recording in this year? Actually received in this year. Actually paid in this year. Hence I am recording in this year's financial statements. Getting my point? So that is what? Cash system of accounting. So regularly the books of accounts can be maintained by following mercantile system. Regularly the books of accounts can be maintained by following cash system also. Cash method of accounting. Now if from your books of accounts only you are going to take the taxable incomes of PGBP, taxable incomes of IFOS, expenses which are allowable under PGBP as well as IFOS are to be taken from your books. Just imagine if the books are regularly maintained on mercantile basis. What basis? So definitely your PGBP and IFOS will also be calculated on mercantile basis. It will make no logic to calculate it on cash basis. And if you will follow cash basis to calculate your PGBP or IFOS, just imagine how much complications will happen. Getting my point? So the Income Tax Act does not want the calculation of PGBP head and IFOS head to be complicated. So they are saying that anyways you are going to take the incomes and expenses from your books of accounts. So if the books of accounts are maintained on mercantile basis, then your PGBP and IFOS will be calculated on mercantile basis. This year, all the PGBP incomes, all the IFOS income taxable under these two heads will be taken on mercantile basis, whether you have received or they are still receivable. Yes or no? All the expenses allowable under PGBP head and IFOS head will be taken on mercantile basis, whether you have paid or they are still payable. So deduction will be allowed whether it is paid or it is still payable. However, there are certain exceptions that we are going to see. Yes or no? But did you remember? Will you remember this thing? Will you remember this thing? So tell me, PGBP income taken on mercantile basis, expenses taken on mercantile basis. So definitely the profits and gains from business or profession under this head will be derived on mercantile basis. The same logic for IFOS also. Yes or no? Will you remember this? This was section 145(1), which says that PGBP and IFOS computation of taxable income under these two heads. The taxable income under these two heads will be calculated on mercantile or cash basis, which is regularly followed to maintain the books of account. Because from that books of accounts only, the income and expenses for these two heads are to be taken. Getting my point? Hello? Sure? Now, pay attention. Now, see, there are certain misconceptions which might arise. You might think that these incomes are taxable under the PGBP head. But actually these incomes are not taxable under PGBP head. Incomes will be taxable under other heads. So those misconceptions should also be cleared right now only, before we actually go and calculate the PGBP income. Yes or no? So, can you have a property which you hold as? Do you remember? House property head. We did long back, 5,000 years ago, when dinosaurs were alive. That time only I taught you house property head. Do you remember? In the house property head, I have already explained this. If the property is held as, meaning if you will sell the property held as, then the income will arise that will be taxable as your. But till the time you don't sell, you hold it as a stock in trade, and during that period, if you let out, you are letting out your stock in trade only. But are you in the business of letting out the properties, or you are in the business of selling the properties? So by selling whatever income you are going to get, that will be your PGBP. But till the time you are not selling, you are exploiting the rent earning capacity by letting out these properties, no? With an intention to exploit the rent earning capacity till the time the property is held in stock, you are letting out the property. So even if this property is your stock in trade, even if this property is your, if the property is let out and you are earning rental income, that rental income cannot come to PGBP, it will always go to. So by mistakenly, if you will charge this income under the head PGBP to calculate your profit and gain, you are gone. Answer will become wrong. This is not your PGBP income. This is your house property income. So that rental income will be treated as actual rent to calculate your house property income from this property, because this property will be considered under the head house property as your let out property. Getting my point, everyone? Now tell me, you have a property and you are acquiring the properties for a business. And what is your business? Letting the properties on rent. This is your business. Now your business is only to earn the rental income. Now if your business is to earn the rental income, if your business is to earn the rental income, main business only is to earn the rental income. Now in this business, whatever properties are acquired, they are let out and you are earning the rental income. Definitely that rental income is your PGBP income. Yes or no? It cannot be taxed under the head. This is the Supreme Court judgment. But wait, this will be taxable under the head. This will be taxable under the head only if the properties are commercial in nature. Commercial properties. There is an amendment this year. I have already told you. Commercial property. What if the property is residential property, and this residential property is let out and the rental income from this property is received. Now rental income is received and you are saying that this is your business. This is your business. Even if this is your business, even if you are engaged in the business of letting out the properties, yes or no, still this income cannot be treated as your PGBP income. This will be treated as your income from house property. Will you charge it under PGBP? No. This will be taxable under the head. This is a recent amendment. So under section 28, under section, there is one explanation number 3 which has been inserted in section number 28. So as per this explanation, if the assessee is in the business of letting out the properties, then income from that property will be treated as PGBP income. PGBP income, provided the properties are not residential in nature. If the properties are residential in nature, then even if the assessee is engaged in the business of letting the properties on rent, still the rental income of that property cannot be taxed under the head PGBP. They have to be taxed only under the head house property. Yes or no? So will you charge this property under house PGBP head or house property? So be careful whenever you are reading the question. You are supposed to identify that something like this sir had already told in the class. If you don't remember the section number, explanation number, etc., no need to remember also. But remember this concept. Whenever you say something like this in the question, apply this logic, apply this concept, apply this provision in the solution. Then only you are going to solve the questions correctly. Getting my point? Hello, sir. So this was your section 28, 29 and 28, 29 and 145. 145. Now pay attention. Huh? Now 28 specific charge is also there. Do you remember? So under the specific charge, there are certain incomes which are prescribed. Those incomes will also be taxable under the head. Under the head, which incomes are prescribed? See, I am not going to get into details about these incomes. Otherwise, it will take a lot of time. Whatever I am saying, just remember that. Okay, no? See, under the specific charge, there are certain incomes which they have given. those incomes will be taxable only and only under the head PGBP. These incomes cannot go to any other head. The government wants to charge these incomes only under the head. Hence, under section 28, under the charging section of PGBP, these incomes are specifically covered. So if these incomes are specifically covered under the charging section, specifically charged under the head PGBP, you cannot take these incomes to any other head. Yes or no? The first income is compensation or any other payment. So if you see this compensation, bring this compensation under the head PGBP. Now what type of compensation? Any compensation? No. The compensation which you are getting for termination or modification of managing agent agreement. So there is a managing agent agreement. What is this managing agent agreement? Blah, blah, blah. No need to get into details. I told you, if you will get into details, it will take a lot of time. So I am not going to explain what is there inside this. I am just here to make you all remember the names of these incomes. If you will see this income, classify this income under the head PGBP. What is this income? Sir, you are getting compensation or any payment. You can get the income on the name of compensation, or the name of the income can be any other name also. But the income which you are getting, is for termination or modification of managing agent agreement for managing the affairs of an Indian company or affairs in India of any. Remember, managing agent agreement. Managing agent agreement cancelled, terminated, or the terms are modified. And for that, if you are going to get any compensation or any payment, that will be your PGBP income. Yes or no? Now, the compensation or other payment you might receive for termination or modification of agency contract in India. So you must have any agency agreement, any agency contract. And if that agency agreement or agency contract is terminated or terms are modified, and for that you are going to get any compensation. That compensation will also be taxable under the head PGBP. Now the same compensation or other payment can be received for vesting of management of any property or business to the government or government corporation. What is happening? Management of any property or business is vested to the government or government corporation. Assessee might be having any property. Assessee might be having any business. So the management of that property, management of that business is vested, meaning given to whom? Government or government corporation. And for that, assessee is receiving any compensation. Even that compensation will be treated as PGBP income. Yes or no? Next one. If termination or modification is happening for any contract, now they are not identifying the contract. Managing agent contract? No. Agency contract? No. Vesting of management of any property or asset to the... No. Now the contract is not being identified. Any contract entered in the course of business or profession. If the terms are modified or that contract is terminated, and for that if you are going to get any compensation or other payment, even that will be treated as your PGBP income. Will you remember this? Will you? So 4 types of compensation. Compensation or other payment for termination or modification of managing agents agreement, for termination or modification of agency contract, for termination or modification of any contract entered in the course of business or profession, any business contract, yes or no? Or that compensation or other payment can also be received for vesting of management of any property or business to government or government corporation. Yes or no? Now these 4 types of compensation will be taxable under the head PGBP. Next one, see, incentives which are received by the assessee who is engaged in which business. So if you are an assessee doing export business, so in the course of your export business, you might receive these kind of incentives from the government. Yes or no? So these type of incentives are received only if you do export business. Yes or no? Any of these incentives are coming to you during the previous year will be taxable only under the head PGBP. You are getting profit on sale of import license. So you have given an import license, you have been allotted an import license, you are not in requirement of that import license, you can sell that import license and get profit. That profit will be taxable under the head PGBP. Then any cash assistance you are getting from the government for exporting. So whatever exports you are doing, on those exports, the government might give you cash assistance, meaning subsidy, etc. is given in cash. Yes or no? Even that will be taxable under the head PGBP. Then a duty drawback can be received. First you have to pay the duty, custom duty, and then that duty is given back to you. So duty which is given to you, which is given by you is coming back to you. You can draw the duty back. You can draw the duty back after you are paying that duty. Yes or no? So when you will pay, that will be your expense. That will be allowed as a deduction. But when you will get it back, that time it will be treated as your income. Yes or no? Sometimes DEPB is given. Sometimes DFRC is given. DEPB means Duty Entitlement Passbook. DFRC means Duty Free Replenishment Certificate. So if you are having Duty Entitlement Passbook or you are having Duty Free Replenishment Certificates, yes or no, and you are selling them, by selling them whatever profit is there, that profit will also be taxable under the head PGBP. Remember these names of income, that's it. What are these incomes, how they are earned, yes or no? Right now there is no time to discuss about those things. We would have definitely discussed if we would have been in a regular batch. Yes or no? So right now, focus on these incomes. If you see any of these incomes, you will charge these incomes under the head PGBP. Yes or no? Then, see, you get the perquisites in the course of your business or profession from your customers or clients. So these perquisites are nothing but personal benefits. Are you getting these personal benefits in the course of your employment? Then it would have been your perquisite under the head salary. But you are getting these perquisites in the course of your business or profession. So they will also be treated as your PGBP income. Yes or no? Next one. See this point number 4. Point number 4. A partner is giving what? A firm is giving what? Interest, bonus, commission, salary, remuneration, etc. is given by the firm to the partner. So for firm it is an expense. For firm it is the firm will claim the deduction subject to limit given in 40 clause B. Subject to limit given in understanding. So the limit is given in 40 clause B. Subject to the limit, the firm will get the deduction. Now some amount will be allowed as a deduction and some amount will be disallowed. The entire remuneration, the entire interest given by the partnership firm is not allowed as a deduction. For example, the firm is giving 5 lakh rupees of remuneration to partner. How much remuneration? But the limit given in 40 clause B was only 4 lakhs. Will the firm get a deduction of 5 lakh or the firm will get a deduction only of 4 lakhs? 1 lakh will be disallowed and that will be added back to the profit of the firm. Yes or no? Now forget about the firm. Forget about the firm has given this interest, bonus, commission, remuneration, salary to partner. Yes or no? Now for partner it is income. For partner it is taxable under the head PGBP. But the entire amount received by the partner will not be taxable. It will be taxable only to the extent allowed in the hands of firm. To that extent the firm has not paid tax. From firm's profit 5 lakh was allowed or only 4 lakh was allowed? On that 4 lakh, the firm has not paid tax. Only that 4 lakh which was allowed in the hands of firm will be taxable in the hands of partner as his PGBP income. Getting my point? The amount which was disallowed in the hands of firm, how much? 1 lakh. That was added back to the profit of the firm. On that the firm would have already paid. That amount will not be treated as income in the hands of partner. So no need to tax it. Will you remember this? But how much amount will be allowed in the hands of partnership firm? The limit is given in 40 clause B. How to determine that limit? We are going to see. Don't worry. Okay? And there is an amendment here. So you can get one case study. You can get some MCQ. A small question of 4 marks can also come on that concept. Because there is an amendment here. Hello, sir. So now tell me. This was about interest or any remuneration by any name. Yes or no? It can be bonus, it can be commission, it can be salary, meaning remuneration by any name. Yes or no? So the firm can give interest, the firm can give remuneration. Firm can give interest, firm can give remuneration. So that interest or the remuneration received by the partner from the partnership firm will be taxable as income for partner as his PGBP income only, but only to the extent allowed in the hands of firm. But what if the firm is deriving profits? Can the firm earn profits? Yes or no? Out of those profits, the partner will get share of profits. The concept which I just told you is to be applied only in the case of interest and remuneration. Profits are calculated after giving these items to the partner. And once the profits are calculated, out of the profit also, the share of profit will be given to the partner. Now tell me, who has earned profits? Firm. On those profits, firm would have already paid tax. So tax paid profits are shared with the partner. Should it be again treated as income in the hands of partner? And if it is done, what will happen? Double taxation. To avoid that, if the share of profit from the partnership firm on which the firm has already paid tax, if that share of profit is given to the partner, that will be fully exempt income in the hands of partner. 10 to A. Will you remember this? Hello. These are small adjustments, hidden adjustment, which you will definitely see while solving the questions. Remember these points which I'm discussing with you. Why? With an intention that whenever you will solve the question, in that question this will come as an adjustment. So that time you should remember, oh, Mr. Ram is there. Okay, he is doing a business, sole proprietary business. Very good, very good. From his sole proprietary business, whatever he will earn will be taxable for him under the head PGBP. But Ram is also a partner in a partnership firm. Ram is also and from that partnership firm he is getting interest. From that partnership firm he is also getting remuneration. Whatever interest he is getting, whatever remuneration he is getting was fully allowed in the hands of firm. Then that amount will be fully taxable in the hands of partner. For Ram, the entire amount will be taxable as is PGBP. So under the head PGBP, Ram is not having one source of income. Ram is not having only sole proprietary business. Ram is also having a partnership business. And from that partnership business, whatever income he will get in the form of interest and remuneration, which was allowed in the hands of firm, will also be taxable in the hands of Ram as his PGBP income. But it will be given in the question that Ram is also earning share of profit. Share of amounting to 50,000. Even that is an income in the hands of Ram. But don't you think that on that share of profit, the firm would have already paid? And you have to remember 10-2 at that time. This income will not be taxable in the hands of Ram because as per 10-2A, it is fully So will you consider this income while calculating PGBP income of RAM? No, exempt. Got it, sir? Hello. So the amount which is not allowed in the hands of firm will not be treated as PGBP income of the partner. Amount which is allowed, that will only be treated as income, PGBP income in the hands of partner. But the share of profit coming from the partnership firm will not be taxable. It is completely exempt under section 10(2)(a). Now see, any sum including bonus, if any, received under Keyman insurance policy. What did I say? KIP means Keyman insurance policy. Now pay attention. Keyman insurance policy, 3 places the income can be charged. This Keyman insurance policy, same amount can be charged under the head salary also. The same amount can be charged under the head PGBP also. And the same amount can be charged under the head IFRS also. Now if you will identify the amount correctly, then only you will be able to charge under the correct head. And if you will not identify correctly, you will not be able to classify this income under the correct head. See, I said that Keyman insurance amount received under what? Keyman insurance policy. Now this amount can be including bonus, if any. So the insurance company might give you bonus also along with the maturity amount. The insurance company might give bonus also. So the entire amount I am talking, including bonus, if any. Now this amount which is received including bonus can be taxable under the head income from salary as profit in lieu of what? Salary. It can also be taxable under the head PGBP. Under the head PGBP as per specific charge under section 28. Or it can also be taxable under the head income from other sources as per specific charge there. As per specific charge there under section 56 subsection 2 clause 4. Don't remember the section numbers. No need to remember the section number. This profit in lieu of salary, section 17(3). Don't remember the section number. Remember that it can be taxable as your salary also. It can be taxable as your PGBP also. It can be taxable as your IFRS also. Right now I am explaining. I am not going to explain at the time of IFRS. And deliberately I did not take this amount while discussing salary. We completed salary. Did I discuss this thing? No. Why? Because I knew that I am going to discuss it later on. If I would have discussed earlier, then you would have forgotten by now. What all things we have discussed in salary? Do you remember anything? Or everything evaporated? You have your exams in January, huh? Every day I am making you remember that. You have your exams in January 27, huh? Or 26. You are in December. Almost about to reach December. 1.5 months is there. So within this very small frame of time, you are supposed to remember and do many things. I told you yesterday also, 2 hours extra efforts required at your home. Now pay attention. This salary, PGBP, IFRS, whatever I am talking. First of all, you will have to understand what is Keyman insurance. Keyman insurance policy is taken for important persons. Which persons? Key persons. Key persons means important person. Now tell me, if you talk about any organization, any big company, okay, talk about Reliance, talk about In Reliance, no, Mukesh Ambani is there, who is the chairman of Reliance. Yes or no? Important, not important? Not at all important for Reliance, no? Hello, hello. Is Mukesh Ambani a key person for the business of Reliance? Is he important for Reliance? Important, sir. Very important. Just imagine, God forbid if something happens to Mukesh Ambani. That would nothing happens. God gives him long life because he's doing great job for the, betterment of the economy. Touch wood. He lives a healthy life. But God forbid if something happens to him, will the Reliance incur heavy losses? Yes or no? Keyman is there or not there will impact the business of the organization. Yes or no? Keyman, Mr. Mukesh Ambani, chairman, employee of Reliance or chairman? Now, other than Mr. Mukesh, there are other persons also. Like there is a big distributor or a big agent. For Reliance, no, Reliance, out of the 100% sales of Reliance, 20% sales is done by this distributor, this agent. If this agent or this distributor, God forbid, something happens, will there be an effect on the business of Reliance? So even that agent, sole selling agent or that heavy distributor, even he is also a key person, key man. Yes or no? Any employee can be there. Any employee like managing director, CEO, CFO, head of any department, plant head, etc. They are the employees of Reliance, but they are also very important. They are also key person. So for any business, who is a key man? Key man is an important person. Key man is an may or may not be the employee of that organization. Yes or no? So can I say key man means an important person, key person, may be employee of the assessee or may not be the employee of assessee. Assessee means we are talking about that company. We are talking about Reliance. Yes or no? So for the company, for the assessee, if any person is important, key man. For my business, he is very important. For my business, he is very important. He may or may not be my employee. Okay. Now, God forbid if something happens to this key man, will the business suffer heavy losses? Yes or no? How much loss? Cannot be quantified. Cannot be. But whatever loss will happen, no, to a certain extent that loss can be recovered if I take insurance on the life of my key man. So the company is thinking to take life insurance on the life of key man. So now the company will approach insurance company. Insurance company, insure the life of my key man. How much coverage you want? 50 crores. How much? God forbid if something happens to my key man, I will incur huge losses. But to the extent of 50 crores, I would recover. Yes or no? In the event of death of my key man. With this intention, the policy is taken. Yes or no? Now tell me, the policy is taken in the interest of the business? The policy is taken in the interest of the business for the key man who is an important person for my business. Now God forbid, if something happens to my key man, I have taken a policy, for example, I have taken a policy of 5 crores. How much? For a period of 5 years. For a period of 5 years, the policy is taken for 5 crores. During these 5 years, for which the policy is in effect, if something happens to my key man, insurance company is going to pay me 5 crores. This is the minimum amount which I will get, or sometimes this amount will come with bonus also. Yes or no? So, in the third year only, the key man died. Some accident happened, or some health issues were there, heart attack, some or the other thing might happen. Key man died. Now who took the policy? Key man took the policy or the company took the policy? Company took the policy. Who was paying the premium? Company was paying the premium. That premium was an allowable expense under the head PGBP, because the policy is taken for the benefit of my business, for my key man. And on this policy, whatever premium is paid, that premium is my expense, allowable under the head PGBP. So I would have taken the deduction under the head PGBP for premium. And this policy is taken for the, in the interest of my business, for my key man. And now if the key man dies within 5 years, now the insurance company is going to pay me 5 crores, including bonus, if any. Who is getting the amount? The person who has taken the policy on the life of another person. Yes or no? The person who has taken the policy on the life of another person, known as key man. Key man is getting the amount, or the person who is taking the policy? Key man is getting the amount, or the person who has taken the policy? Businessman. Company is getting that amount. Now tell me, the company would have suffered loss in the business because of key man's death. And to compensate for that loss, the policy was taken, and according to this policy's terms, now the amount is coming. This amount is coming as key man insurance policy amount. Yes or no? Who is receiving this amount? Now tell me, I'm giving you 3 options. For company, this amount should be taxable under which head? Bang on. Correct. This amount, including bonus, if any, coming to the company, will be taxable in the hands of company under the head PGBP. Understood? Then forget about salary and IFRS. You identified the correct head and you classified the amount under the correct head. Now, wait. Now, for example, if I will take the insurance policy of my key man, I will have to tell the key man also, no? That key man, you are a very important person for me. For your life, I have taken a policy. Key man will ask me, for how many years? 5 years. How much is the amount? 5 crores. Now, key man, if you promise me that you will take care of yourself and be here with me for 5 years, I will endorse the policy on your name. I will endorse the policy on your name. After 5 years, I was supposed to get the money. If something happens to you, I was supposed to get money. And if nothing happens to you, after 5 years, I am only going to get the money. And for me, it will be my PGBP income. If something happens to key man, I will get the money. Or if nothing happens to key man, after 5 years, the policy will mature. At that time, whatever amount will come to me, the amount is going to come to me only. For me, it will be PGBP. But if you promise that you will stay with me for these 5 years, yes or no? Certain conditions I will put. If you will fulfill these conditions, then I am endorsing the policy on your name. If God forbid something happens to you, your nominees will get the money. Hello. And if nothing happens to you, after 5 years, when the policy will mature, company is not going to get that money. Since the policy is endorsed on your name, you are going to get this huge amount. Yes or no? Now tell me, if the policy is endorsed on the name of keyman, policy is endorsed on the name of, and nothing happens to the keyman, who is going to get the money? Keyman, because the policy is endorsed on the name of keyman. Now tell me, for keyman, amount coming from keyman insurance policy, including bonus, including, will be taxable for him under which head? If the keyman happens to be my employee, then under the head, forget about PGBP and IFOS. But what if keyman is not my employee? Then under the head IFOS, forget about PGBP, forget about salary. Yes or no? But God forbid, if something happens to the keyman, something happens to the, and the policy was assigned, policy was endorsed on the name of keyman. So now who will get the money? Company? No, policy was already assigned. Policy was already endorsed on the name of keyman. Now the company is not going to get any money. Now the nominees, legal heirs of the keyman will get the money. Will it be taxable for them? Yes. Any amount on the death of the keyman received from the keyman insurance policy is not exempt. Normal life insurance policy, normal life insurance policy is there, yes or no? On that normal life insurance policy, whatever death benefit is received, that is exempt. But if the amount is coming from the keyman insurance policy, even if it is coming on the death, it will not be exempt. It will be taxable. Now who will get this money? Nominees, no. For nominees it will be PGBP. For nominees it will be salary. So it will be IFOS for nominee. Did you understand? Will you remember where to classify when? Now this discussion I did not do in salary. Done here. And the same discussion was supposed to be done for IFOS. I'm not going to do there. Yes or no? The discussion is over. Keyman insurance policy. Okay. Now pay attention. Any sum, including bonus, if any, received under the will be taxable under the head PGBP. If it is not getting taxed under the head salary or IFOS, then it will be received by the organization, company. Then for that organization, it is treated as PGBP income, specific charge. Yes or no? Next one. Any sum, whether in cash or in received or receivable for not carrying out any activity in relation to any business or profession, sometimes known as non-compete fees, sometimes also known as, okay. Now okay, wait up. Now next one, any sum, whether in cash or in received or receivable for not sharing any know-how, patent, copyright, etc. So two payments are there. One is non-compete fees. One is, and second one is non-disclosure fees. Non-compete fees means what? You are not going to compete with me. Case Cafe is there downstairs. Case Cafe. Sarah sir's business. Yes or no? Now I am very, interested to start my cafe also. Just opposite to KS Cafe, there is one shop which is empty. I took that shop on rent and I started making a cafe there. Don't you think in my cafe, I will sell the same products which are being sold in KS Cafe? Hello? Same food items and all? maybe more delicious as compared to KS, maybe more cheaper as compared to KS. I'm coming in the competition of KS Cafe. Can I? Which law in India can stop me to do that? But Sara sir can stop me. Yes or no? He is calling me, Umang, come here. I said, yes sir. I heard that you are opening US Cafe. Mine is KS Cafe. You are opening just opposite to my KS Cafe. Hello? Possible, not possible? So just opposite to my cafe, you are opening your cafe. See, very good decision. But don't you think you will also not be able to do your business properly? I will also not be able to do my business properly. Few customers you will take, few customers I will take. Yes or no? Sometimes your business will go up, my business will come down. Sometimes my business will go up, your business will come down. And we will fight with each other. Third cafe will come, MS Cafe. And he will become number one. So let me be number one over here in this area. In this entire area of West Mamblam, wherever the KS Cafe is there, within 1 kilometer radius of KS Cafe, you are not going to start a cafe. I said, sir, okay. But if I do that, no, I lose my business income which I would have earned by starting this business. And you are telling me not to start this business, not to do an activity in relation to this business. So I would lose the prospective income which I would have earned by doing this business. Sir, I respect you a lot. I will do whatever you say. But you cannot do this to me, no sir. Even I have all rights to earn that business income. And if you are stopping me to earn that business income, you should pay me something. Sara sir entered into an agreement with me, non-compete agreement. Within 1 kilometer radius of all the KS cafes, entire Chennai, yes or no? Umang, you are not going to start your cafe. You are not going to do an activity in relation to this business or profession, which will be a competing business. Getting my point? So, in that particular scenario, I am going to pay you 10 CR. How much? For the next 10 years, stop doing this business in competition with my business. Stop doing activity in competition with my business. For not doing a business also I get the money. Bloody people do business and get business income. I am not doing any business, still I am getting business income. For doing something in relation to business will give you business, will give you income. If I do an activity in relation to business or profession, that activity will give me income. That is my business income. But sometimes not doing any activity in relation to a business or profession can also give me income. Even that has to be your business income. This is known as non-compete fees. Known as non-compete. Will you remember this? Now, non-disclosure fees is also there. For not sharing know-how, patent, copyright, etc. So there is a know-how, there is a copyright, there is a patent, any intellectual property right. And I have that know-how. I am the owner of that intellectual property right. I will share that intellectual property right with someone for royalty. I'll get royalty. But that person does not want me to share that same intellectual property right with someone else, because he wants to exploit that IPR commercially. If I will share that information with someone else, then that person will not be benefited, no. I'll give you one example, you will understand, okay. Example is, for example, there is one big pharma company and there is one big research company. Research company is engaged in the research of different types of medicines, different types of vaccines. One company known as Bharat Biotech. Have you heard about it? Bharat Biotech is engaged in the clinical research, medical research, vaccines, etc. are developed. So Bharat Biotech has developed a vaccine for cancer. Successful trials happened, the vaccine is effective, it is showing that the persons having this vaccine are, recovering from cancer and all. So the research was successful, vaccine was developed, and now for this vaccine, the patent has been taken by Bharat Biotech because it is their invention. Yes or no? Who has taken the patent? Who has taken the patent? Now Bharat Biotech has taken the patent. All the pharma companies know. Cipla is there, Dr. Reddy's laboratory is there, Sun Pharma is there. Yes or no? All the pharma companies will come running to Bharat Biotech. That we heard that you have developed a vaccine for curing cancer and you have taken the patent also for that. Give that patent to us for using it for next 5 years. We want to use the know-how. We want to use your know-how. We want to use your patent to manufacture that vaccine in bulk quantity and sell it to earn profits. Bharat Biotech will say, okay, we are going to give you. But for that, you are going to give us royalty. You are going to give us. No problem. Agreement is made. Agreement is between Sun Pharma and Bharat Biotech. Bharat Biotech will share the information, share the know-how, will give the patent for use, which will be used for next 5 years. By whom? Sun Pharma. And Sun Pharma will pay the royalty for using this patent. Getting my point? Now tell me one thing. If Sun Pharma does not restrict Bharat Biotech to share this knowledge with someone else, Bharat Biotech can share this same information with Cipla also, Dr. Reddy's lab also. Yes or no? All the pharma companies all across India, I will share, I will disclose this information. Would Sun Pharma love this? Would Sun Pharma like this? Why? Because everyone will use the same formula, make the same vaccine. It will affect our business, no? So we will have to stop whom? Bharat Biotech, not to disclose this information to others. But will the Bharat Biotech agree? Why? Because there is an opportunity to earn more royalty by sharing this information. Yes or no? Why would I lose that opportunity? Another agreement will be made by Sun Pharma with Bharat Biotech. Non-disclosure agreement. This information specifically will be shared with us for 5 years. Yes or no? And during the period of 5 years, promise that you are not going to share this information with some other pharma companies. For that, you are going to lose your royalty income. Yes or no? Which you could have earned. Don't worry, that we are going to give you in the form of fees. Non-disclosure fees. 100 crores. How much Sara sir gave me? Small amounts or big amounts? Usually these amounts are huge. And to charge these amounts under the head, PGBP specific charge is there. Yes or no? For not doing any activity in relation to any business or profession, if some money is given, any sum is given, whether in cash or in kind, whether in cash or in kind, whether the amount is received or receivable, for not carrying out any activity in relation to any business or example of KS Cafe and US Cafe. Getting my point? Next one. Any sum in cash or kind, received or receivable for not sharing know-how, patent, copyright, etc. will also be treated as income under the head PGBP. This will be known as non-disclosure fees and the earlier one will be treated as non-compete fees. Yes or no? Will you remember? Okay. Now 35, there is one more income, amount received or receivable in cash or kind for transfer of asset whose cost is allowed under section. There is one asset whose cost is allowed as a deduction under section. Usually the cost of asset is allowed in small parts in the form of depreciation. But if you are doing a specified business, the cost of that asset is entirely allowed as a deduction under section 35AD. So, do you have any asset? Yes. The cost of that asset was entirely allowed under section 35AD. Now you are transferring that asset. So any amount which is received or receivable in cash or in for transfer of that asset whose cost was entirely allowed under section will also be treated as your PGBP income. Whether the amount received is less than the cost, equal to cost, or more than cost will not make any difference. Entire amount which is received by transferring that asset will be taxable only and only under the head. Nothing out of that will go to capital gains. Entire amount will be taxable under the head PGBP. Yes or no? Now next one, see, there is one more income. There is one income which I am writing here. Color, blue color, wait. Fair market value of inventory. Inventory means stock in trade, which is, fair market value which is of inventory which is converted into capital asset. Even that fair market value will be treated as your business income. If you have any stock and you convert that stock into capital asset, so on conversion PGBP provisions will be applicable, and the fair market value as on the date of conversion of such inventory into capital asset, the date on which the inventory was converted into capital asset, on that date whatever fair market value of that inventory was there will be taxable as your business income, minus the cost of that inventory will give you profits. Reverse can also happen. Your capital asset was there, you can convert it as your stock in trade also. That time section 45(2) will be applicable, capital gains. And when I'll be teaching you 45(2), no, that time 100% I'm going to bring you to this point. Hello? Capital asset converted into stock in trade will result into capital gains. And that time I will tell you that what happens if the inventory is converted into capital asset. That time I will bring you to this point. But right now remember, this fair market value as on the date of conversion of an inventory, of your inventory into capital asset, the date on which this conversion takes place, as on that date, whatever fair market value was there, that fair market value will be taxable under the head PGBP only, as your PGBP income. Will you remember this? Hello, sir. So this is the end. This is the end of specific charge income. So how many incomes you have seen? All those incomes which I have just now explained. See, for me it was very important to discuss all these incomes. Why? Because till the time you will not identify these incomes, no, you will not know that which incomes are to be taxed under the head PGBP and which are not to be charged. Ultimately, the entire game is we have to take the incomes minus expenses. We have to take the incomes minus. So which incomes you are going to take? First you understand that these incomes are to be taxable under this head. Now after this entire discussion, no, you are in a position. Forget about the expenses. Now you are in a position that at least you know that which incomes will come under the head PGBP. Which incomes will come? Main incomes. Which incomes? Incidental incomes. Incomes covered by specific charge. These all incomes. Yes or no? Incomes covered under deemed PGBP incomes will also come. That we are going to learn. Yes or no? Now all these incomes you will add. These are the gross incomes taxable under the head. From these incomes, now we are going to compute the profit. And how the profit will be computed? Reducing the expenses. Now, what all things are allowed as a deduction from these incomes to calculate your profit will be the second part of this chapter, which we are going to start after the break. Yes or no? Deductions allowable under the head PGBP 32, 37, 1. After the break, we are going to start from here. Okay? Take a break.